Hi, everyone. Welcome to TimingResearch.com's Analyze Your Trade event number 204 for April 6th, 2023. This is the new live charting format of the series. So I have 8 great pro traders scheduled for today's event. And just, of course, all information is for educational purposes only. Trading is not suitable for all people. Please consult your financial advisor and only trade with money you can afford to lose. And I am recording each session individually, and those will be available on TimingResearch.com, as well as the Timing Research YouTube, Substack, and podcast channels. And so today I've arranged for Norman Hallett of the DisciplinedTrader.com to be our opening presenter. So I'm going to go ahead and turn it over to him.
And here he is. Here is Norman Hallett. That's me. And I want to thank you, David, for having me here. Again, I love to start off when I can, and I'm really glad you put me in the slot. It's what I used to do for the Traders Expos, where I used to run around the stage and give my high energy, you better be disciplined presentations. But I'm also a trader, as you know, and I think I've been getting into more of that, exposing what I do and how I trade. I'm really an old school trader that really uses old school means. If you look at these charts, all you're seeing are 2 moving averages and an occasional RSI. That's pretty much what I've done my entire career. I've written books on trading, building trading plans. I've written several white papers, probably 10 or 15 of them over the last 7 or 8 years, of which I'm going to offer you one at the end if you're interested. But for this, I wanted to kind of give you my the way I do things. I think it's going to pull you back to maybe for your experienced traders when you started to trade and what you looked for and how you approached it. I never left that. So, you know, I think when you're having pretty good success, you tend to use, I'm going to talk about this a little bit more. You tend to use position sizing as your gauge, as far as amplifying when you see a good situation, as opposed to trying to do all kinds of other tweaks. It's important that I believe that you identify your best triggers, the ones that give you the best performance right off the bat, right out of the gate. And we're going to talk about probably that when I look at some of these charts and maybe how to handle them. I've got the chat open. I'm always a little bit concerned that I'm not seeing everything, but if anybody wants me to, I'm looking at the commodity market. I've got the NQ up. I've got the NASDAQ. I've got the S&P I can bring up. Right here I have the euro dollar, the Japanese yen. I look at gold, look at copper. Are there any commodity? I'm a commodity guy, futures guy, and that's really where I'm going to be focusing today. And I think that if you're a stock person and you have no reason to want to look at commodity charts, I think I may be able to give you a reason. You know, if you're looking at stocks based on inflation, you may want to just look at some gold and so on and so forth. There are also everything. There are so many units that in the stock market available to you that reflect what's going on in the commodity market. So uranium, I don't even know where uranium is. Is it traded? Are you phoning in from Iran or Russia? I'm not sure. I'm not sure. Let's try the 30-year bonds first. That I got here in what I look at. Let's expand this. All right. Just going to bring the chart. I don't know what you can see in the chat and what you can't. All right. Well, I think what we're looking at, well, this is a daily chart. This is where we'll start. And the thing I like about bonds in general, whenever I think about bonds, I think about long runs. I think about runs like this and runs like this and runs like this. I think about if you can catch a chart where the price action where you get off to, you have a good trigger, and that trigger works early, you can get a run out of the bonds. And I'm going to show you a few things. We have several triggers that we use in our basic strategy called loaded gun. And I'm going to point out maybe one or two of them here. I need to preserve those that pay for the course, but I also want to give you an idea of what you can do because you was kind enough to attend today. One of the, you see this right here? This right here is a loaded gun trigger. So is this, incidentally. Let's look at this one, where you have a hesitation. This is a hesitation where you have a small body. Let me stop right here and just say that I am, again, in my simplicity, I believe that everything is in the price. Okay, I do look at momentum. I used to look at volume, but it started to confuse me, and it took me off track. And most of the time, a turn and racing of momentum, it involves an increase in volume. So I've taken away all of the redundancies so that I'm clear at what I look at. And when I find a trigger that works, I'm I get very, very excited. I look at all the triggers that I use and all the situations that those triggers occur. And effectively, if this is a short trigger, and it is, this is the trigger right here where we have a very small body like this. I call this indecision. Now, and it's even better if it's a shooting star. But when you have a small body, there's kind of an indecision. Now, the Japanese, when they, and maybe you can ask us a question, was Norman right to Steve Bigelow when he follows me? The Japanese felt that, I'm looking at the bond chart, 30-year bonds. The open and close are the key factors in a candle. Open and close are the key candles, the key factors in the candle. In fact, to a large degree, the Japanese farmers who started this, I guess, 400 or 500 years ago, they almost ignored the tails, the wicks. I think there's a reason in certain areas, for instance, when you have a double top like this, especially a triple top, and those tops feature a shooting star like this, that's a big thing. In fact, when it tries it a couple of times, this is not an official shooting star because it has looks like a lip or a nose here on the bottom. But this would be one where the open and closed range is tight, and at the bottom of the entire range, you've got something that is a very high probability. Because of this, I would put on a number of positions that were in the top. If I'm trading from 2 to 6 positions, remember I said, and I'm not sure you may never have heard this so specifically. I'm huge on position sizing. I believe it is your greatest offense and your greatest defense. When a setup happens, when you see one of your best triggers, and this is one of our A+ triggers, when you see this, you need to look at your surroundings. Okay, now when I look at the surroundings here, and I'll take you to the current there, I'm just giving you the background of how I look at things as we move through other charts. Here's a top that was established at a run, and looks like it was somewhere near that 30, Fibonacci level, but I'm not going to draw the lines. I'm not going to confuse you with lines. Then you've got, you have here an attempt at that high and a failure, and another. So we have a triple top. Everybody kind of knows what that is. When I see this right here, when I see hesitation, which is a small body, it doesn't have to be a shooting star. It could be any small body, followed by a movement through a select moving average. I'm not sure what this one is. Could be the 9 or but through one of our moving averages here that we like. It's a tight moving average. Then this is a signal to go short. Now, I'm going to talk a lot about the position sizing today because I don't think you hear enough about it. So, okay, this is one of our what I believe is an A+ trigger. And and it's important for me to give you a side step here, and that is that you should identify all of your triggers that you use to get you into trades, and then rate them based on your back testing of how good they are at giving you an initial push, giving you working out the way you want it on the initial in the next bar or two or three. Okay, and the ones that pop early, very early, they're going to be your A and A plus type triggers. Those that don't are less, because you always want to, I believe you always want to take a little scalp and also get a runner. I'm a believer of putting on multiple positions. I hope I'm not giving you too much. But so when I look at this, I'm seeing an A plus trigger. Okay, but where is it situated? If I'm trading from two positions, and I never add when I put on my initial positions. I'm just a guy that says if the trigger is good, I've got all my power there. As a market extends and you add a position, you know, you're low, you're having your break even, so to speak. There's a lot of bad things that can happen, I believe. I'd rather look at the initial entry and pick triggers that give me fast starts. Okay, so here is a trigger that I've identified as an A plus trigger. So you need to identify your trigger. So let's say I've identified this as an A plus trigger. Well, it's in a very highly favorable position to go short. Again, triple tops are not, they're not uncommon, but they're not that common. When you see them, you need to look to take advantage if you get a breakthrough. Now, what I don't like about this trigger is that when I take a trigger, I like it to take out a considerable number of lows of the previous triggers. So, you know, I love this. I love this, and in my 2 to 6 range, even though I've got a lot of positive feelings about it going short because of the triple top. I like the fact that I'm using an A plus trigger, and the trigger has activated here. This is only a 3 for me, which holds another rule. I'm giving you the grand rules that I follow for literally 4 decades. Well, 3 decades. I wasn't much of a trader in the first decade. I was a cowboy in my first decade. But now I'm a consistent income-oriented trader. Okay, and this is so I always think big. I always think big, and I trade small. Okay, I'm going to say that again. I think big, and I trade small. So I'm always. I also have recently been dealing with helping traders to pass the prop trading. I'm a huge fan of prop trading. I think I'm one of the first ones that really hung on to that. I've got a course on it that I may show you if you have time later. And it's an inexpensive course to help you set up your trading plan to pass prop trading. But in that prop trading, you know, it's important to follow particular rules in order to pass. And so some of the things I'm saying right here fit in that respect. Anyway, in this particular case, if I'm trading from 2 to 6 positions, and that's my range as far as my the number of positions I'm willing to take. This is a 3. Again, I'm thinking big. I wanted to, but I'm always under trading. When I talk about prop trading, I say test for the 150,000, but trade it like a 50. Okay, so that you don't jeopardize, you don't get close to a red line. I hope I'm not confusing you here. Let's get into this. So we have a trigger here. I'm taking 3 positions, okay, and I'm moving lower. But I just want to show you how I enter and and the importance of position sizing. But I want to give you some of those keys. All right, and I'm in this until such time as the market turns around and flips to the other side of whatever moving average I'm using. Okay, so here's another signal right here. You have a couple of small bodies followed by a movement through, and look at where it led to. This incidentally would have almost stopped us out because I put my stop up in here. Anyway, it's coming down. Now here's a reversal. Okay, so if you reversed, you would have reversed it back here again. Okay, so I'm just going to show you the runs, and this is all about. I think I want to show you how I do it, because I think some of you may want to know that, and I want to. But look at this: you have a double bottom, okay, a double bottom, and then you have this a small body on one side of a moving average, and then that big move leading to this. Okay, so we're seeing it a lot on the bonds. I love to trade my loaded gun on the bonds. Okay, this is only one of the things. I've got a few that you need to know about, and don't go trading. Don't go looking for this and start, doing it. You need to look at your surroundings too, and so on, and get your position sizing straight, because this may have been you put on the same position sizing on some of these. You're going to get hurt. So I need to coach you on that, and you need to understand fully. But look at what the value of a good trigger can do. Again, when I'm talking about, when you talk about the bonds, you look for the run. You look for runs, okay? If I had had a trigger here down, I would not have taken this trigger, because the other thing I want to talk about, and maybe you're, hopefully, don't write this down, just put it in your head. Resistance and support is our major barriers, okay? To believe that we're going, and they usually hold. Look at how it held here. Look at how it held here. It's very true of the bonds also. So there wasn't much to do here. I may not get my run, whatever. Double bottom, good place to put on a position. Let's look at what's going on in the current. I think I'm live here, right? Yeah. Right here, if you had been right here in April, this is a small version of what I showed you here, okay? I like this. This is not what I talked about, okay? This is not, why is it? This is not a hesitation, really. Too big of a, okay. I'm looking for hesitation followed by a bold move. This is bold enough, okay? But because it's not really that bold, this may only be in a 2 in my 2 to 6 position sizing range. And, I would continue to be long here. You've taken out the highs. Not only have you taken out the highs, but you've taken out a considerable number of highs here in yesterday's action. Now today we checked that on the bounce, but this is something that could result in one of these moves. I like looking at this at a long position. The other thing that I have to say is that the market is very good at shaking out the new traders who are not disciplined, or it's very good at shaking out the experienced traders who are not disciplined. So when you see a major, I'm just going to draw the horizontal line for you real quickly, because sometimes my perception is off. But yeah, we're right here. So my perception was off. So never test your perception, even mine. Test what has proven out to be from back testing, okay? So we need to get through this area in order to see a pop, okay? I am not a person that puts in a buy order above this, and you shouldn't either. Look what happened to the person who did that so far today. But I do like the idea of keeping my eye on this for some sort of confirmation. This is one of the few markets where you can have confirmation. You can wait for confirmation, even though it pulls you away from what you believe you should have had in profit. You can wait for confirmation because, again, this is a market that tends to really streak. So I have no problem with that. So here I would be waiting, whoever asked this for, sorry, I'm not naming your name. I'll just call you Big Shot. Because I don't care, right? All right, so because I love you. So I would be waiting here for a daily close above here, and maybe even and then I put on my Elliott type hat. The best entrances for stuff like this is to wait for a pullback of some sort, but you don't get it a lot of the times when you're looking at. Well, you did get one here and here, but so, if you get a pullback, you can do it. But what I would be looking to go long here, a close over here, you can put on your first minimum number of positions if you want. But I would wait for at least an open the next day of confirmation. If not, a second close because you've got plenty of time. So that's my feeling about this. It looks like a good market. The target would be the recent high in that, you know, in the 140 area. But again, bonds are very volatile, and my personal fundamental view, which I don't really bring into here, but it does sometimes affect my range of 2 to 6. If I think a market's very aggressive, I may go 3 to 8, whatever, but I kind of set that as far as the market volatility is concerned. But in this particular case, you know, I think there are some susceptible elements to the stock market. I'm not sure if the bonds are driving the stocks or the stocks are driving the bonds, and I don't really care. I've always made the mistake till I learned about 25 years ago that don't look at the bonds to give you direction in the S&P or the NASDAQ. Look at the NASDAQ for directions for the NASDAQ, because you can get fooled on any day, 1 or 2 day basis. You can have conflicting information, and then you look here and you say, how can you ever have gone long the stock market with this? So I hope that answers your question. Okay. Oh, thanks. So, all right, let's look at I hope that answers your question there. Let's continue to look on. US silver. Let's look at silver. I love silver. Silver is something that I really think you should have your eye on now. Here's the silver market. I'm going with the daily charts here mostly. Let me just pull this here. I'm moving my chat window around. You may not even see what I'm doing here. All right. All right. Here's the 10 minute. I usually trade the 5 and 10 minute. Let me just show you real quickly here. Let me look at the 5 minute. I like to trade the 5 minute. Here's a nice loose, well, here's a nice, quite loose, but they don't always work, the signals. This right here, this is something that I've employed. We have you know, I'm not the only one that has lousy ideas and good ideas. We all have them, but you only apply the good ones and stay away from the lousy ones. Well, I've got some really smart minds that are trading our loaded gun trading plan. And one of them came up with this idea. This I believe is one of the Fibonacci numbers. This is the 34. We also use the 50, but this is like a guardrail. You see this? See this signal right here? This is one of the beautiful signals I talked about. I would have taken this signal, but very minimal, because I'm against the guardrail. I don't like being able to cross. You know, you need to cross the 50 or the 34 in order to have. This is a barrier, just like when I was talking about the you know, supports and resistance areas, like would be right here in this area. And usually support and resistance is a band. You know, you see some lows here, and you also see a low here. This is this area right here, from here to here. This is kind of a band where the market could actually come down in here and come up as it did. Well, it hasn't, but it could have even been affecting these all the way back here. You know, people like me look all the way back and draw that line all the way through. But I just want to say that don't take some of the signal. Here's one that really did work out. See, when you have your back, see this right here, double bottom, nice thing. When you have your back to your guardrail like this, you can get some explosive moves. It's much more high probability than the same signal against the guardrail. Okay, so I hope I'm giving you some, you know, use the 50, use the 200, I don't care what your, you know, this is, just get the concept, okay? So, you know, this is an engulfing pattern. I mean, this is an engulfing pattern, followed by, which includes a huge tail, which took out a quadruple test of a high, and maybe even a quintuple test, or whatever. But look at this, and you know, and it's against one of my best triggers. So again, you got to know when to use this trigger and not. Okay, and here's one that lost also. Okay, so don't go using this, but I'm just giving you an example. And also an emphasis that even the best triggers don't work all the time. So always trade small, think big. Okay. So this, an engulfing pattern, as I'm sure Stephen will tell you after I'm done, if you care to ask him, is one of the more powerful patterns. Okay. And if you have a tail like this, it's even more powerful. But I will give you a caveat, because there's another, there's a Stephen, the two Stevens, I call them the, you know, what is that movie? The two, I think it was the two Stevens. You had Stephen Bigelow and Stephen Nissen, NISON, who they're both they're both your candlestick experts. Okay, I did a real at the Trump Tower about 11 years ago. I had a show where I brought in all these speakers and so on, and I was the head guy because it was my show. And I brought in Steve, and one of the things that I learned from him is that when you see these big tails like this, actually he said it about a shooting star and a like this right here, and this is a Reddick's tail. This is close to a hanging man. What he said is that you may many times, I think he used the number 70%. I hope Stephen doesn't shoot me for misquoting, but much of the time the market will back up and actually give you a chance to get in on a tail like this without just jumping in when you see it. If there are other features, I probably would have jumped in on this one to see it without seeing it and withstood the emotion here. But I'm saying that if you do miss this, the market comes up a little bit, don't worry about it. And you may get another chance because he says the majority of the time it will check here. Whereas here it didn't do it because this is not a shooting star. This body is much too big. But let's talk about just the fact that it's a engulfing pattern where the body here engulfs here. And you had, and your momentum is below even though we have a higher high here, slightly lower high here, the momentum is coming down. So I'm looking for a short trade here. If I had taken this trade here, I would have had a scalp here. If you had, so when you have conflicting information and you have accumulations that are recent, don't look for huge runs. Look for your scalps. That's where you should take your smaller profits. So here we are here. Look at this. But where are we now? Well, this is the 5-minute chart, so this is not going to tell us. Let's look at the daily. Okay, and wow, isn't that beautiful? Really nice. So you have a huge candle, and you got to be bullish. I don't know if you've asked because you're looking to get in, or you're in it and you're just gloating. Either way, I would have taken out half my positions here. If I had gotten in here at these levels, then I would have been out of half of my positions at least at this accumulation. I would have left the rest. But you see what's happening here. We're checking. You see what happened to the new trader who just bought blindly because they were just waiting for these tops to be taken out. And I don't say I'm being unkind, and I shouldn't be, because there are some pretty good traders who would do this. But I want to tell you that don't jump in with the full boat on the initial break. That's one of the things that I learned a long time ago. So what I would do here is I would have, upon approach here, in fact, probably at this candle right here, it's a small engulfing pattern. It's it's negative against the positive. It's against all this accumulation. I would have been out right here with half my positions. I never would have been in for this. So shoot me, but I would have been in for all of this. All right. So what's happening here, and I learned this from a guy named Juan Maldonado, who is who works with Jody Samuels, who is the Elliott Wave queen. You want to know about Elliott Wave? You go to you just stop what you're doing and go to Jody Samuels, and she has some of the top people working with her. One of those top analysts is a guy named Juan Maldonado. Well, Juan, if I heard him correctly, he says that these kinds of accumulations mean an accumulation in not only volume, but interest. People are taking sides. I've always felt they've taken sides here. You have people wanting to protect their run and wanting to see more, and other people that are defending against what could have been a critical point further out. But what's happening is you're getting a high volume here. And when it breaks one way, what we used to do, and you can do this, I still do it. I don't actually use the pin, but I don't have, I can't believe it. I don't have my compass here. It sounds like I don't, but I do. What I do is I take my compass and I put my pin, when I see this starting to happen and it breaks through the bottom of the range, I'm asking myself, how far can this go down? What I do is I take the pin of my compass, okay, and look up compass, Google it if you don't know what I'm talking about. But you engineers, I put my pin here and I spread the compass out. It's got a pin with two, it's got the pencil on one end and the pin on the other, and I put my pencil at the beginning of the accumulation. I leave my pin here, and then I swing my pencil down to where we used to think, and it still works. It worked here. How long? What's the potential of this? Take your pin, take your pencil, move it, swing, keep the pin where it is, swing it down. You would have gotten this line right here. Okay. Now, okay. I'm not hearing any claps and any round of applause, but I'm telling you that old school way works. Okay, it works. Now, use some more old school ways. You were going to expect resistance here. Okay, when you have higher highs and higher lows, these can represent, especially the higher lows on the way down. These can represent resistance points on the way down, of which it did here. Look at that. It did here. And here would be the next one, of which it did. So this happens to you. You didn't need the compass to say it could have gotten here. You would have looked and said, we got a accumulation here. Somewhere in this area, we should see resistance, of which we did. And then what's your target? It's going to be in this area again. But watch for it here because this was our first higher low, and we had it here. So we would have been watching this area. But in order to ask yourself, how far could it go if it busts through resistances? This is all it had. Now, I'm not saying this works every time exact, but it worked here. And I just think you need to think a little bit old school. You wonder why these old crusty guys like me, well, I'm not quite as crusty as some of them, but they're using these. Oh, yeah, they're talking about algorithms and all. Yes, they all use it, but not everybody, and you don't have to. If you're a senior, I love to train seniors because this is a great place if you do it right for looking for income, especially if you're prop trading where you're not trading your own money, you're trading somebody else's money and you're getting 90% of the profit. In fact, they're giving me 100% of the profit for the first 25,000 I'm earning. So, I'm just saying seniors, grab on to what I'm going to show you in the end, at least get on my list. And they'll put my personal email in there, Hallett at the Disciplined Trader. You may want to do it now. If you've got any questions about what I'm talking about, NHALLETT at thedisciplinedtrader.com. It's my first personal email. I always give it to David's people because, you guys are you're neurotics. So I'm willing to, I know you're serious. So, so here is, what I'm looking at here in the final answer is this is a bullish chart. And you're looking to go long. It's broken through this barrier, but it's now checking that breakthrough, which it does very often. Again, when you get a breakthrough, look for the second. To put your buy stops in up here is probably is a lot safer than just buying right now. Okay, even though there is a certain degree of safety. There's now that all these people have seen their dreams shattered, and the same people went short here. They're looking to make out here. They're looking for the next big move. In any event, I'd be looking for a place to go long. I'd be putting maybe a buy stop up here if you're away from the market and you're working every day. I wouldn't quite. There's a lot of fake outs, and silver is a very popular market to do that. Loves to fake people out. So I hope that helps you there. All right, let's see if I can look at any other signals you want, any other commodity. Laugh out loud. Yes. TY. What is TY? I don't trade that. Let's see. What's the size of the radius? I don't know. The radius, you determine the size of the radius by putting your pin here. Well, it's really not the radius, but yeah, you're putting your pin here, and you've got to identify for yourself, and you can call it right here. Right, this is where I would put my pin. This is the beginning of the accumulation, the end of the accumulation, and that would be your radius, and you'd swing it down. Okay, let's look at any other signals. 67, just a kid. Yeah, you are just a kid. TA is for thank you. And I was going to chart you. Thank you. Okay. TY. See? All right, let's look at some of the markets I look at, since I'm not getting much there, and you can throw it in there. I'll have time for you. Euro dollar. I mean, come on. Oh, what did I do there? I made the euro dollar disappear. So instead of screwing around with that, let's make this appear, and I'll put the euro dollar in here. You can tell I'm not, I'm still not if it wasn't for David, who's running this event, I wouldn't know where to put the cursor. So, all right, here is the 10-minute chart of the euro dollar. And let's look at the daily, because I think there are some good opportunities here. I think if you're a modern trader, you got to think about trading the currencies, because you just should. All right. They generally can have long runs like this, just like the bonds, because a lot of the measure of the currency, a dollar is still very strong. So there's a lot of measure against the, that's why you have the forex pairs and so on. But I only trade against the U.S. dollar. But look at this. This is that signal again. Look at that. And where did it lead to? It led to a little bit of a move. Again, I am a guy that likes to take at least partial of at least half of the positions I initially put on, I like to take as scalps. Why? Because my mother told me years ago, very long ago, that take what God gives you. So I'm taking what God gives me right here. I'm taking my first bunch out here. But look, it leads to runs. It leads to runs. Now, here's another accumulation. Okay, how far could this? You got a breakthrough here. This is a nice place to enter. After you've gotten one of those signals that I talked about. It's not generally in the place I like it, but I just want to show you that measure again. Pin here in the compass, pencil here. Let's swing it down, and what you're going to get is right in here. And look you, and that's when you ask yourself the question: what's the extent of the move after an accumulation? I'm telling you, it's an accurate measure, just as accurate as anybody, any data freak will tell you. Put your pin here, put your pencil here, swing it down, and think of something else, because the majority of the time, this thing is going to get there, and look at it worked out nicely. Okay, so you can move it yourself, the stop. I don't know, beyond my capabilities. Here's you've got higher lows coming in here. We're under, some of my favorite moving averages to either the 50 or the 34, which is a Fibonacci number. But when we cross that action in one of those hesitations to, look at that loaded gun trigger and look at where it leads. Beautiful. So where are we now? And here's a nice loaded gun signal that lost. So again, don't just do this. Here's another one that lost. Would I have taken it? I won't even tell you. I would have taken this one, but not that one. Anyway, here's a nice. There's nothing to do here in the euro dollar yet. Okay, what I'm looking for here in the euro dollar is a movement lower, and the reason I'm looking for a movement lower is because of my fundamental views. It doesn't mean I do anything, but that's what I'm kind of looking for. I need my trigger. I need it all to get set up, and we're testing. This is a daily chart. I'm looking all the way back at June. I'm looking a good 7, 8, 9 months. We're testing this. It looks like we're feebly testing it right here. We're getting a lot of chop and momentum. Can't seem to gain any momentum here. We're against we're in that high 50 area, which means there's plenty of momentum left if the darn chart wants to give it to you, but it's not giving it to you. And so, and my feeling about we're not done with the corrective stock market, just a personal feeling. I believe that the check of this high, which was the check of this high, is not going to make it. So I am going to be looking for a place to go short. So that's what I would advise you. I wouldn't go long here, even though we're looking at a long position. If I did, I would put in very short stops, meaning, and the short stop that I like to put in is 2 candles back, the lower of the candle, including the wick. So I would, you know, and if I were doing this, if I had a huge day that day, maybe I would. I wouldn't, but if you were crazy but not that crazy, sly, maybe you take on a position where you put on 3 or 4 positions here, but you have a very short stop. So you have the loss of 1 position. So I wouldn't even do it here. It's not a great place. You have a partially engulfing pattern here, but you have a lot of support on the moving averages. I like to see it above. You know, listen, you're getting a lot of smaller bodies. Now look what happens in some of these moves. Look at the size of these bodies. Look at the size of these bodies. When you have something happening, you have a consistent, I find, size of the bodies. Now, these were small bodies going through. It did, you know, but look, again, that support and resistance that I talk about, I could have drawn this, I would have drawn this line, and I would have played against this. And then when I saw this signal here that took out both moving averages that I like to use, boom, I would have been in this for this, okay? So you need to have your own parameters, but those parameters, in my view, need to be to take into account what you're seeing as far as, I know you've heard it a million times, support levels, resistance levels. You know beforehand that this move is going to have a tough time getting through. I don't care how positive the news is for the silver and negative for Bitcoin and everything else, or the stock market. You're going to have resistance here. Again, don't look at another chart or when you're trading the euro dollar. Yes, you can, it is against the dollar, so you can have some feelings against the dollar, but the euro dollar has many more things that are going on besides just being part of a basket of currencies, one of the leaders in the measure of the dollar index. So don't look at this chart. If you're looking at euro dollar, look at this chart, okay? Do we have anybody that wants to talk to me about any particular thing? What's GFI? If that's a stock, moving averages, lines, SMA 5 and SMA. Yeah, it's an SMA. No, I believe this is 9. It's 9, I think, or 8. And this is 34 here. This is a 34. Sometimes I use the 34. In a more volatile market, I like to use the 50. Again, this is a measure more of my position sizing than it is anything else. Okay, so take my general principles here. Don't take these specific numbers. Don't just throwing up a 34 and saying if it goes past. No, it's not going to work for you. You're going to miss a lot of great trades, and it's going to. And so, all right, let's look at USO. I think we talked about that already. The bonds. Maybe it came late. I think that's the bonds, right? Let's look at here. Look at the gold. Let me look at my time here. All right, we got about 15 minutes. I'm sorry, let's look at the right one here. Let's look at the gold. I guess I haven't looked at it in the last 6. Let's put it up here. What am I? I was weaned on gold. I ran one of the largest option firms in the country in the 1980s. And all we did was buy gold and silver options, buy puts and buy calls. There weren't exchange traded options at the time. So I love gold. I love gold. My first trade was in 1979 October, and I got all my clients in, of which I just started. Then I had 4 people put in $10,000. By January, the second week of January, they all had 110,000, 120,000 in their account. Gold went to 850. That hooked me. That's why I'm here today. So thank the Wright brothers, well, not the Wright brothers, but shame on me. They were the good guys. Who are the brothers that cornered the silver market? Wasn't the Wright brothers? It was the whatever. Who knows? The Hunt brothers. Thank you. I got a senior. The Hunt brothers. Okay, great. All right. So look at this. Here's one of the, look. Come on. Against a double bottom like this, a triple bottom, you get one of my nice signals, and boom. You're off to the races. How far could this accumulate? This is not an accumulation, but I do it here even too. Put my pin here, my pencil here, and I'm going to be in this area. I'm going to look for hesitation. So I don't want to overemphasize my crazy old school. Well, every trader, every technician before about 1985 had a compass on their desk. and a straight edge. And at Saturdays, we would get these long, gigantic, and I know very members, confirm it with me with some of the old guys out there and gals. We used to have these oversized charts that we used to get on Saturday. I don't know how they came on Saturday. It had Friday's clothes on it, but it came in our mailbox on Saturday. And we have to, you need a kitchen table to open this. It was like on onion paper. And we used to take our compasses and our protractors, and we used to mark up the charts with the pencil. And am I the only one that remembers that? All right, where are we now? The gold looks about the same as the silver, although we have broken out fairly considerably here. I don't know, looks like we may check this accumulation here because it looks like we're having a little bit of a down day today, about $10 or $15. But this is a positive chart, and I would, I generally don't buy depressions of a market like this. I want to see that first candle. In fact, I don't mind seeing a breakout of a new high, because you're going to get a run and I get my scalp. So, and you leave one in there. If you're putting on 3 positions, 2 is a scalp, 1 is a runner. I call him a runner. Okay. Here's another. Look at this. That's beautiful. You have look at all these small bodies here. You're going through one of my favorite moving averages, and boom, you got a nice run. In fact, you had your scalp right in here. So you got a nice scalp and a nice run. So trade small, think big. Okay. So what do I think of gold? I think it looks beautiful. I think it looks beautiful because I think gold may very well, this may be gold's time right now for a while, to see that $24 level again, 25, 26. Where it goes from there, I don't know. But I think, those of you who have more standard portfolios, the problem is by the time you pick up your Kruger ends now or gold, you've already missed a lot of the move. So not sure if this is kosher for you guys. Saying kosher, happy Passover, everybody. That applies to. USO is oil. Okay, so my feeling here is you can buy it with a certain amount of safety. I wouldn't put in a huge market here because I think we may see a little bit of sideways movement before we figure out what's really going on with interest rates. Where this may be another week of sideways, in my learned opinion. I'm sorry that I didn't know that, but I only look at the symbols I look at. Just like I'm married to one woman for 42 years, I only look at her. My wife says you can read the menu, but you can't order. So let me show you one thing while I got you here. I wanted you to, if you want to know more about me or get in with me a little bit here. Let's see if I think I'm going to. No, that's you don't want to buy from me before you know me. This is something I wrote on. This is something that I wrote about a month ago. It's when I really started to get, put the pedal to the metal on prop trading. My experiences from now prop trading for now since about October of the year, having passed several. I'm now funded for $150,000 account, 100,000, 50,000, and I'm about to be funded for a $250,000 account from different prop firms. One I usually recommend, but they're all a little bit different. But there's a way of trading prop for you people with $5,000 accounts and $10,000 accounts. You want this white paper. It's only about 8 pages long, but I want to give you the pros and cons of trading somebody else's money and getting your own. And getting all the profit, 90% or 100% in some cases. The way they do that is because 90% will fail, and they charge you a monthly fee while you're testing. Okay, I passed the $50,000 test in 10 trading days. I passed the 100,000 in 17 trading days, and the 150,000 in 22 trading days. So I paid 1 fee or 2 fees. There are people who have paid these fees for years and are continuing to try, because even if you're paying 150, 250, 300 a year to test for some size, whatever size account you're testing for, it's a lot less than when you lose your own money. When you have a $5,000 account and you're down to 2,000, you wonder what to. It takes a lot of these monthly fees to to equate to that 3,000 that you lost. Do this. If you're a small, and if you know, the thing about it is the people with big money, they're the ones doing it because they're saying, I'm going to put my money in CDs. I'll risk somebody else's money. So this is a paper I wrote. It'll put you on my list, and I'll be feeding you stuff on this, on prop trading. So now it's exploding. Everybody's doing it. Ask them if they've passed. Don't ask them if their trading plan, you know, can help you trade. Ask them if they've used a trading plan to pass, because I've got one that smooths you through. Okay, but I want you to know me a little bit. You know my sense of humor from right now. If you don't have a sense of humor, just please forgive me. But stick with me anyway. thedisciplinedtrader.com/prop win. It's an instant download, so you'll get this once you get on my list, and you'll get an email, and boom, you'll download this. So I think you'll get an idea of it's for you. But gosh, I mean, it sounded like a dream to me. Could this possibly be true? It's true. It's happening. I'm getting the checks now. So, and I'm keeping them to myself. But when I get a considerable number of checks, I'll show you how consistent that, because this is an income thing. I have a course right now that I've just put together. The beta people went through it already. That is all about using prop trading for your income. For your income, you know, because you're trading small and you're thinking big. Yeah, a $250,000 account. You don't need that. You want $1,000 a month, $2,000 a month. Go ahead and pass the 150 or 250 because it's easier than passing the 50. But don't trade it like a 150. Trade it like a 30 or a 50. This way you stay out of trouble. You stay out of their red line. You won't get down, because if you and if you have a good trading plan, you're just going to make a little bit of money, a little bit of money, a little bit of money, a little bit of money. It's like a dream. It's like a dream. Grab the white paper. Okay, so that is it for my advertising. Let's look at the you said it was the crude market, was it? Yeah. Okay. I love the crude market. One of my absolute favorites. Do I have the daily up? Yeah. Let's look at the crude. As you see, I also trade the QM here. Oh, that's corn. Well, let's. This is the half contract. I think I have the full contract somewhere else. Maybe I don't. Oh, here it is. Okay, here's the crude contract. And the other, I love the, hey, listen, if you're a small trader or you're somebody like me, a trader that trades smaller but thinks big, go ahead and take 2 minis instead of one. You know, give yourself a chance to take profits along the way. You know, I think if one thing prop trading teaches you is that don't leave that money on the table. I mean, that's when people jump out of the window. They don't jump out of the window because they blew out an account. They jump out of the window. People jump out of the window. I'm talking about high story. Then maybe they'll jump out of, you know, I'm right on the ground level. I'll jump out, you know, pretty much for any stupid thing I may do. But if I'm going to go to my roof for, you know, 10 to 20 stories where it's really going to hurt me, or I'm going to bounce, they do that because they had a big gain and they didn't take it. And now, not only did they let it go to break even, but now they lost a few bucks. I'm opening the window and jumping out. That's how people do it. Don't do that. A professional trader takes on multiple positions when they can, and I'm not saying scaling in and scaling out. Again, I take them all in the beginning. But if I'm in on this move, which this is one of our signals, if I'm in on this move, I'm not waiting for the close. I'm taking, look at this accumulation, okay? I'm taking my first round here, if I didn't take it before. And then I leave the rest to what I call lewd and lascivious, okay? And when it went up here, and I saw this accumulation here, and I knew I was going to get trouble, and this red bar started to happen, I would have been out of the remainder except for maybe one position. So I'm always looking at my environment and putting on the positions that I need to put on. Okay, so I need to give you a quick opinion here on the here. This is a sideways market right now. In fact, I believe this could be the start of a head and shoulders top. Okay, I don't believe that we're going much higher. That's my considered opinion. I'm seeing a complicated shoulder here against a couple of accumulations here. Look at these accumulations and look at the respect that the market is giving this resistance / support. We're now below that support, and we have an engulfing pattern. We've got some, even though the tails are each way. I am looking for a signal to go short. It's not here yet. We've got a top here, a shoulder here. This is actually very beautiful, although, you know, this shoulder here would kind of mess you up. But I'm looking at the majority of the trading here. And, you know, this looks like a classic ready to form. Not so much classic, but ready to form. So that's my opinion. Watch for short position in the crude. I hope you've enjoyed it. I really have fun just talking about what I'm thinking. This is like my mind opened up. So if you like my style, go ahead and pick up the book that I just mentioned to you, the prop trading book, because I really want you to consider trading other people's money. And if not, the same techniques that I use are the same conservative techniques that you need to use for this. You need to be a conservative trader in these markets. Okay, thank you, David. I appreciate it. And I'm hoping everybody enjoyed that.